Hello and welcome to Fireside with the VC. My name is Andrew Romans, and today we are with neonVest, the co-founders of neonVest. Full disclosure, neonVest is a company that 7VC led the seed round for, so I know these guys really well, so it's almost awkward asking questions when, I kind of know the answers, but I learn something every time I talk to these guys. So we've got Aakash, Shah, and Surya Viswanathan. So guys, thanks so much for joining me. We've been meaning to do this for a long time. Good to see you finally.
Yes,
Good to see you, Andrew.
Thanks for having us.
So Aakash, why don't you start us off and explain what is neonVest, what do you do, and why does it exist? And then Surya, I want you to give us your perspective as the co-founder too.
Sure.
neonVest is a SaaS tool for founders. We connect early stage founders to top tier VCs and operators, primarily from the perspective of scaling up their networks and meeting people that can really be helpful in their growth in multiple different ways. It's not just about funding, it's about much more than that. And in fact, this idea was born from the fact that you can get a lot more out of, initially VCs, but other experts, rather than just simply asking for funding immediately. And that's literally the premise of it, combined with the fact that, look, relationships are extremely important. More so for early stage founders, more so for first time early stage founders. But even outside of that, if you think about the variables for success, your network plays a really, really important component. And really, this is just a way to productize that. So that's why it was born. That's what we do. Surya, feel free to add anything.
Yeah. So, the network is obviously important, like Aakash said. The other thing is its ease of access and efficiency. People say investor relationship building, fundraising, it's a full-time job. The people that are successful are pouring hours into this, which conflicts with product building and actually getting the business off the ground. It's a huge problem for every founder out there. To date, there hasn't been an efficient solution for this. neonVest is created to give founders that access on demand at a click of a button and get warm intros delivered to them so they can focus on building their business, but building those relationships at the same time. In addition to that, it's multi-purpose. And so, you get advice, you build your network, you get secondary referrals, and sometimes those lead to, investments or customers or partnerships. And so it all compounds exponentially based on the number of meetings you take with neonVest.
Yeah, let me just make something absolutely clear. The way it works is that if you're a founder or a VC or CTO, famous important person at a tech titan, Apple, whatever, you go to neonvest.com, which is neon like a neon flashing sign, right? NEO. So you go to neonvest.com and you sign up either as the supercharger, which is like most commonly a venture capitalist like me, or you are the startup founder looking to get meetings with these VCs or other superchargers. And what happens is the founders, they pay money for a subscription of how many Zoom meetings do you want, like per month, or a package of how many Zooms you get, and you pay for that, and boom, while sitting in your mother's basement or wherever the hell you live, you are on a Zoom with a serious venture capitalist that's an allocator that might have been difficult to have met otherwise. And I think on a cash basis, this is often cheaper than a flight to Silicon Valley or New York and an Uber and a hotel and all this jazz and a conference. And there you go. I remember my own startup in the 90s. We actually got inbound contacted by Sequoia before we had a single venture capital meeting. And my co-founder said to me, dude, I don't know if we want like our very first meeting to be with Sequoia. Maybe we should like meet somebody else and get our choreographed game plan down before we go and screw that up. It's like a one-time shot. But okay, so let's click down on the value prop to founders. Another important thing none of us have declared here is that the VCs, if they want to, or the superchargers, the people kind of mentoring on these Zooms, or potentially making investments in startups that they bump into through the platform, they get paid like $100 or so per thing. So you're charging founders, you're paying some money to the superchargers, and then you guys have your, income revenue for it, and that is your primary revenue model. Do I have that right?
Yeah. Yeah, no,
Yep.
that's absolutely correct. And I think it's really important. We made this decision at the beginning of launching it. A lot of people have this view that, look, founder wallets are small, VC wallets are big, charge the VCs, don't charge the founders. I would say while technically that may be true, fund AUMs are going to be pretty large relative to startup balance sheets. But at the same time, you have to think about the value here, who's getting what value and how much of it. And what we realized very quickly is that the imbalance is skewed towards the startup, in the sense that the founder is the one who is kind of entering, wanting to do these calls, building their relationships, building their networks. As a VC, Andrew, I mean, you know this extremely well. You get sort of inbound, probably of like hundreds of leads per month, just startup founders wanting to talk, wanting to catch up, whatever it might be. And I think a part of this is really just to efficiently segregate that, such that you only speak to people who may be truly relevant to you or people you want to speak with. But I think more than that, it's when you price the asset is a chunk of your time or any supercharger's time. And you need to make it known that that is valuable and that it has a price and someone should pay for it. Now, when you look at the superchargers we have on, no one, or I would say a very, very small segment of the population is actually doing it for the money. I mean, I don't think anyone can really get rich. I mean, you can do very well and probably get very rich off.
I mean, I asked you like, what's the value prop to the founder, but maybe we should start with the value prop to the VCs, so listeners that are new to neonVest understand and don't like dismiss this. Getting paid $100 for 1 hour for me is like less than I would be making as an electrician or mowing lawns, right? Like it is not a motivator. Somebody puts in a simple $10 million into my fund. That's $2 million in management fee over the life, and you have a new fund every couple of years. I mean, that's not the motivator. But we're all frugal, and it's interesting. And like, you look at the price per pound of this, of that on fish or whatever you're doing when you're shopping, you can't help but see it. The real reason, I like the analogy of Brad Felt. So Brad Felt from Foundry Group, in one of his books, I think it was like How to Build a Community, he talks about office hours, like a professor on campus university office hours. My office hours are 2 to 4 on Tuesdays and Thursdays. Any student can kick my door in if you get to me first, standing in line, and I will spend time with you and talk about anything and everything from your career to why you're failing physics. And apparently, David Cohen kicked in his door that he had never known Brad. Brad never knew David. There was no warm intro from Stanford or whatever. And he pitched him Techstars. Brad liked the pitch so much, he nominated himself as a co-founder of Techstars. And that's a serious change the world company. So I think there's an element of serendipity that, easily you can book yourself from 7 a.m. to 7 p.m. of nonstop Zooms. And if you just sprinkle a couple a month, it's a little bit of, I'm going to take a Zoom with someone that I might not have otherwise ticked all the boxes that fits our specific framework of what we're hunting for now as active allocator investors. And the result is, I'll tell you, it makes me feel good. I don't know, Surya or Aakash, maybe talk a little bit about the pay it forward, model. I mean, we were in our first early days of kind of aligning on mission. That was one of the things that got me excited about opening our checkbook to you guys.
Yeah, appreciate that. And Surya, dive in after this, but I just do want to make a point, which is, I mean, it's exactly right. And in fact, I mean, you see some of the superchargers on board at the moment. We have Paul, who's been very gracious with his time. He's a GP at Azure Cap. That's a $1.2 billion fund. He was the founding partner there. He is doing it because he wants to leverage what he knows, but deliver that impact to multiple people in a way that's efficient for his time. And I think that's similar to what you're talking about, Andrew, where you don't necessarily know outcomes. You don't know how things may be positively beneficial or not. But if you do kind of put yourself in a situation where you're interacting with multiple people within a similar space, such that it's not completely unrealistic that something can happen, then something starts to form. And it could be like David comes to you and is like, look, I want to start Techstars, and then you actually come across from it. So a large part is really making connections, but then not limiting outcomes. And that's also why we've specifically taken the route of not charging sort of carry or finder's fees on deals that happen through the platform. We don't charge advisory fees if long-term advisory relationships happen, because the whole point is that we want to connect people that should be connected, but then we don't actually know what could happen, and we want everything to happen. Then Surya, I don't know if that's kind of how
I had
you
a
feel
call with a
about it.
guy yesterday through neonVest. I hadn't done one in a little while, and I did one, and I said, look, let's schedule a follow-up call outside of neonVest, and let me see, if we can be helpful to you. And that's relationship development. It's networking. This guy's been around for a long time. He's been very, very successful, and it's understanding the network. But Surya, did you want to comment more on the pay it forward element? Because obviously a Hyundai is, you make more money mowing lawns than that. And if you're into your venture capital career, it's not the money.
Yeah, it's not the money. And what's interesting is when you look at the normal founder VC or investor dynamic, it's almost always 100 founders are trying to clamor for a VC's attention at a conference or even just on an email, and the VC's ignoring them, and it's just like the VC doesn't want to talk to them. And anytime you have that two-sided dynamic, it's always a bunch of founders trying to access these very hard to reach VCs. Here, the dynamic is actually flipped. And the reason for that is the innovative approach to the conversation. neonVest is the first, to our knowledge, two-sided system that's actually connecting them where there's an equal, if not more, slanted, interest from the actual investor side as opposed to the founder, which is very rare. And it's because of this office hour advisory networking format. If a VC just gets pitched, unless it's really high quality or relevant for them, they don't want to see it. They already see thousands in their inbox every year. They're sick and tired of it. But if it's from the perspective of helping, everyone has this innate desire to help. That's why people, mentor or tutor or volunteer after hours. It's also kind of a stroke of an ego to some extent. People want to feel like they're smart or valuable. And it's like, oh, like someone needs my guidance. Yes, let me step in and see how I can help. And like you said, it's good karma. They feel good about it afterwards. So when it's structured like this, the VCs are very eager to like take every call with every founder that gets delivered to them. And in fact, they actually demand more calls. We've had VCs come to us, say, hey, can you give me more founders to talk to? I want to talk to more. So
yeah, I think like our model, we generally like an entry point when the company has $100,000 of monthly recurring revenue. And when you're doing like 10, 12 Zooms a day, it's hard to take ones that are pre-product, pre-revenue. And thanks to neonVest, I get on a couple calls a month with some of these guys, and I try to help as much as possible. So I'm not just like giving the gong on the call the minute I say I'm not going to invest in your round now, come back to me later. We do the full call and try to give as much advice or help to improve the pitch, change strategy, anything. So it's kind of like, I don't know how every other supercharger is, but I feel like I'm trying to be the most valuable McKinsey consultant, but like, forget McKinsey, like this is relevant. I've spent my whole life on fundraising and pitching and written books on it and stuff like that. I've had this published in books and on my LinkedIn before I met you guys. So I didn't just write it after meeting you. And this is maybe why I clicked so much with you guys is we almost mathematically formalize pay it forward, that if you spend 30% of your time doing favors for other people within the ecosystem, asking for nothing in return, that your remaining time, 0.7. So if your time is 1, 30% is 0.3, favors for others, asking for nothing in return, your 0.7 should have a multiplier on that. Now, when you are gunning for your own, checkbook, bank account, business. People should, if you did a ton of favors for that lawyer should be willing to do free stuff for you or introduce you to a family office that invests in your fund or whatever. And now your 0.7 is a minimum 2x. So you're actually at 1.4x above your one that you were on when you were a selfish bastard doing nothing for other people. So pay it forward makes sense mathematically. And usually when I talk about this, people are like, maybe 10x. Maybe you get introduced to some Saudi prince and like it's a total game changer for you and your fund, and as a founder. So
Yeah.
so maybe like enough on the VCs.
And Andrew, I think just on that point, I think what's especially relevant there is that people can't predict networks, especially exponential scale in networks. Networks, I mean, basically, I mean, so as neonVest is, right? You have a node. So I've connected a founder to Andrew. That opens up Andrew's entire, let's just assume it opens up your entire VC and startup world, right? Then that can have an exponential value prop to that founder, right? And so what they're paying for is not necessarily just the connection to Andrew or to Dan or to someone else on the neonVest platform. What they're paying for is the ability to enter into a new network that they had no part of. And initially we had done this with the impression of, look, we were kind of focusing on disadvantaged founders, right? There's a lot of people that have certain networks already built and in place, and they're fairly robust. But there are also others that, while maybe the merit of the idea, the execution, the drive is the same, the networks aren't, and they actually vastly underperform, right? And so initially it was like, look, what can they do? But the real sort of insight has been that, I mean, everyone can benefit from having a better network, and better means stronger, more connections. But the thing is that the networks, the way they rise is not linear, it's exponential. And that's what's particularly fascinating with when you talk about pay it forward, right? You never know where it's going to come from. You just know that something could come, and you've opened up a series of new possibilities effectively.
Yeah, I think people at even the most advanced stages of their careers that I interact with tell me how excited they are coming back from Davos or the lobby in Hawaii, or some high level event where they're meeting people, and they're still excited about expanding their networks and developing and cultivating, animating existing networks. I think neonVest, with like these kind of typically 1 hour Zoom calls and a whole diverse set of them, just makes sense. I think the power of the network is important. But the thing is, if you get a shot on goal with a VC and you're presenting and they're really listening, trying to help, someone's getting funded here. There's no doubt about it. I mean, you bring like founders seeking funding together with VCs, someone's getting funded. But there's people getting introductions. And I think that the feedback, that open environment of feedback, rather than VC saying, I'm not getting paid for being on this call, I got to get off this call because it's not right for me, and giving just bullets, nuggets of advice, that's probably like the most important thing. But at the end of the day, it's extremely efficient, and in a culture of post-pandemic Zoom, it works. So maybe enough on the value prop to VCs, pay it forward, meet more people, develop their own networks, get out of their little white man Boston, Harvard, Stanford bubbles with all warm intros for the Zooms. I think it's good. But talk about some of the different things. So funding is pretty obvious. What are other core value prop to the founder? Maybe Surya, why don't you kick that off?
Yeah, so it's going to be advice, feedback. VCs, as they say, I don't know about the exact stats, but less than 1% of companies get funded by VCs. That's way less than the acceptance rate to Harvard or any of these selective schools that people already feel very difficult getting into when they apply. And so when you have such a low probability of making that happen, you need to be, at your A game. You need to be at the top of the stack in order to even get that meeting, let alone get the ultimate funding. And so what neonVest does is it gets you these industry insiders, the people that are actually writing checks, to give you exactly what you need to optimize your business from a fundability standpoint. It's not all about fundability, but a lot of these companies, they have great ideas, they have good markets, big markets, but they're not marketing or packaging themselves appropriately. And so because of that, because of those flaws, they're not able to, present their story and get what they want from the investors if they go about it their own way. With neonVest, the VCs within 5 or 10 meetings, you're going to have a good idea of how to present yourself best. And so when you go to that 11th meeting outside of neonVest, you're likely telling a really good story if you have a good product and a good market, and a good team. If you don't, then the VC is going to give you advice on how to improve your business so that you can get there. Maybe it's through pivoting, maybe it's through improving business metrics or other sorts of things. And so outside of fundability, there's just so much that you can talk about. You can talk about your strategy. You can talk about, product and tech. We have operators on there, both, founder operators as well as VCs that have operational experience. Talk about your kind of, roadmap for growth. Talk about, just other people that they may know that you may want to get referred to. So people also get a lot of useful referrals from this. And so it's really everything kind of packaged in one: funding, advice, and referrals.
Yeah. Also, the market's moving every day. Like 2021 spring was a very different funding environment from, midsummer 2023. And you can spend a lot of money on going to Stanford or Berkeley or Harvard and take a course on entrepreneurship. And and what's the price of that class alone? And how market up to date is the advice you're getting? I had a neonVest call a few weeks ago with a guy that was trying to raise 2 million, and he was pre-revenue, pre-product. And I said, maybe you should do 500K. That'll enable you to hit this key milestone that he needed like 200 grand for, and then go out and raise 1.5. Like I was basically trying to help him do it. You know what I mean? And it wasn't like he had a shot on goal with me to get funding, as opposed to, this is exactly what you're doing wrong, and this is like, maybe how to do it right. But you've got guys you have superchargers, so people that are kind of giving the mentoring that are, and the mentor is the mentee and learns from everybody. It's connecting the dots both ways, value exchange. But give me some, like, name drop some VCs that are on the platform, and then let's talk about some non-VCs that are really valuable superchargers, so people understand, the scope. If it's not only VCs that are, you can get paired with.
Yeah, for sure. And we've we've scaled up the supercharger side quite nicely. We have about 540 or so superchargers on, and really from a diversity of institutions. Mainly it's VCs and CVCs, and we've started, as you know, going into operators, people who've raised Series B, C, gotten their business acquired. I mean, honestly, I'm happy to just even go through the last 2 weeks, because we've had some solid people come on. But in general, I mean, some of the top funds on Bessemer, PayPal Ventures, Samsung Catalyst Fund, Wells Fargo Strategic Capital, and then we have investors from India, Latin America, Singapore, Hong Kong as well. I mean, if I just go through, honestly, to the last week and a half, onboarded someone from one of the top people on Forbes. It's a Hong Kong real estate tycoon, his family office on the healthcare side. We onboarded someone who's been in tech for 10 years in generative AI. Now she runs an angel group with a bunch of other people that's in Silicon Valley. And I think one of the really interesting things here, as it pertains to the supercharger side, is it's really not just people that are out there. It's unlikely you'll find like Naval Ravikant or even like a Brad Feld. And while we'd love to have them, the platform is really trying to showcase the fact that there's a lot of other people out there, maybe not that top 1%, but a lot of people that can add a ton of value to you. And just because they're not like rock stars or just going all out on publicity doesn't make their advice or their relationships any less meaningful. Sometimes it can be more. because I know
I wouldn't
exactly
sell
how
yourself
that
short
call
though. I mean,
would
like
go.
Dan Saporin, I guess I can
No, no.
consider
So
him one of my
we do have
mentors, one of
those
my
people.
mentors in the
Yeah.
90s. Dan was a partner at Canaan and was just so generous with his time, you know, giving me free neonVest feedback. Canaan never invested in our fund, but I don't know, they might have given us a term sheet. We were doing well back then. It was just
Dan's
some great
awesome.
people.
Dan's been an advisor to us. He's also an investor in the company.
He invested before
And
we
he's
did.
been fantastic.
Yeah,
Yeah, he did. He did.
he'd wired cash and he was kind of talking me into it. But so and didn't you have like some exciting CTOs that were on? So you know you can also so I think if nothing else, take a neonVest call and say, this is the valuation we're thinking. We're thinking of doing a safe, and this is the amount we're thinking of raising. It's like, no, do a price round, do it this and this valuation. The market is shifted, but on technology too. On there's a lot
Yep.
of like irreversible decisions you can make on tech. Who are some of the like CTO type people that you guys have?
Yeah, no, we've so I mean just on the 21st, in fact, so that's about like 5 or 6 days ago, we onboarded the CTO of Goat. Goat is the online sneaker place. He went from being the first founder engineer to managing a team of 100 people, sold his company, sold his next company. Now he's come on, he does a couple of investing things, but he also actively wants to help entrepreneurs with sort of his tech advice, and especially in scaling the tech and building a team around him. That was literally just a few days ago. That was a referral from investor in our company. Um, I think one of the and then I mean, for instance, someone else just a few days ago, in fact, as well. Two-time previous founder, two enterprise SaaS companies. He was the CTO of them, raised a pretty large round. Now he's shut both of those. I mean, he's returned capital back, and now he's starting up something on his own, building this generative AI tool on the back of something that it looks similar to Notion. And so I think one of the cool things, and as you mentioned, this tech angle, I mean, it's an important component of a VC in general, but it's also important to have people that actually build tech, right? Not just invest in them.
Totally.
And what's interesting is to get their perspective on things everyone's talking about today, right? Like what are the actual ideas in generative AI? There's many founders today that are like, look, let me build something on top of this. But it's great to get a perspective from someone who's like, okay, I'll invest in this, but also I'll build it. And what do you want to build? And so no, it's and this operator side of things is really quite interesting. I mean, we've got people from Zendesk on board. We had someone from UiPath, that's an AI company. And so we're starting to see a lot of people get interested in this tech side of things, and I think that's because it cuts quite close into what VCs are typically looking at.
Yeah, I mean, when I moved to Silicon Valley myself, personally with my family, what was great was just like sitting in coffee shops, hanging out with everybody in the ecosystem, from lawyers to founders to everybody, and saying, let's block 2 hours, and it's like smell the roses part of your difficult entrepreneurial career of whiteboarding and strategy and paying it forward stuff. Silicon Valley has largely left Silicon Valley. I moved to Austin. A lot of the world is on Zoom. So I think the timing is good for neonVest to allow that kind of magic dust stuff to happen across. Not only fundraising is a key ingredient to survival and success, but it's by far not the only thing. So actually, I've been working for almost 10 years on book 4. So I've published 3 books in 6 languages, but my 4th book, there's one section that I'm definitely going to add neonVest, because I write this section. It's about like, yeah, but how the hell am I supposed to pull that off? Which is one strategy for fundraising, whether it's your seed, your A, your late seed, your series C or D, is to say, take like July and August, or take 2 months within your cash burn getting to zero, and say, reach out to 100 or 50 founders that have raised funding from the stage of VCs that you seek to raise funding from, or even beyond. Maybe they haven't raised Series B, but they raised late seed and maybe A, and say, hey, dude, can you give me 30 minutes to do a mock Zoom where you pretend to be some worthless roadkill asshole venture capitalist, and I will pitch to you, and you can interrupt all my answers with another question, or you can be the cool VC, whatever. I just want to refine my pitch, and I'm trying to give myself like 4 pitches a day to founders. And even if you can introduce another founder that would be willing to pretend to be the VC, listen to my pitch and give me feedback. And I'm not seeking any funding from you. I mean, like, dude, I'm not seeking funding. I just want 30 minutes. I promise I'll pitch in 10. You give me feedback. We'll get off and you get back to your busy day. If you could get like 2 months of like 4 of these calls crammed in, one, you're developing your founder network without having gone to YC or something. Not everybody lives in SF to be able, or New York to be able to pull that off. Whereas like neonVest is a no-brainer of saying, hey, I want to do nothing but VC-backed founder pitches, and maybe give me a freebie and don't even charge, or like whatever. It's like 2 months of neonVest is not that expensive. And first of all, by the time you're done with that, I guarantee you somebody will be like, hey, what's the smallest investment you take? I'm like, well, you're the founder of, you built up operations at Zynga. I think, what would you want to do? The guy's like, how about $15,000? Fine. And then on his deck, it says some of the people backing this company that are smarter than you VCs, boom, 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 boom. And then the key is that you don't say this when you're asking for the meeting, but afterwards you say, hey, here's my investor control schedule. This is like my target investor list. We want intros the last week of August, and then we want to jam with collapsing our meetings into September and the first week of October, and then just try to close by Thanksgiving. So if you make that sheet and you have like the name of the fund, the name of the partner, their email, and the name of the person giving you the warm intro, if you did those 50 founder meetings, you're going to get warm intros to like all the active ones, and advice of like, hey, don't look him in the eye or touch his ears. He's very autistic. Like, you're going to get advice on how to deal with those guys. That's far more valuable than an expensive investment banker on a retainer. But anyway, maybe tell me your thought.
For sure.
We've discussed this before, but what do you guys think about the idea of founder talking to founder?
Yeah, I think it's a fantastic idea, as you mentioned, and I think it can tie even into the direct supercharger connections as well. But I'll start with the founder. I mean, and that's why we focus on founders that are funded, at least a couple million is our rough benchmark, because when you look them up, they're going to have 5 or 10 or even 15 names on their cap table. If you look on Crunchbase, it'll list several VCs. And so when you talk to them, you make a good impression, you essentially are going to have access to those VCs if they want to make an intro. And maybe they're not going to make an intro to all of them realistically, but maybe out of 8 they'll make an intro to 3.
They can make an intro. They can also give you the information. Like
they can
there's
give you
times
the
where I'm like,
information
I'm
you
willing
need
to
to
forward
talk to them.
Like, I'm willing to forward your deck, and if that, like the double handshake, and if David Blumberg wants to take a call with you or have an associate, then God bless. Or I could be like, you know what, dude, you're a bit toxic, but I love you. Here's his email. Send him a call. Don't mention my name. That's like the 2 levels of, build out your list. Even like be like, they're out of money. They're fundraising right now. If you want to like get a meeting, and maybe they take a meeting for their deal flow for the next fund, but it's a zombie fund. That's amazing intelligence to be collecting.
Yeah, no, exactly. And so, and a lot of times VCs, and I'm sure Andrew, you probably agree with this, a lot of times their best deal flow comes from the founders they invested in.
Totally.
And, so this is a very, strategic and smart way to get, connected to the VCs you want. And like you said, Andrew, to your previous point, the founder is going to have way more insight into the VC's personality and behavior than anyone else. And so he or she is going to give you those insights so that when you talk to them, you're going to know way more than the other average Joe who's just getting some random, cold intro or someone else who doesn't know them. And you're going to make a better, more favorable impression on them. And so when you line up 50 of these, and you have a Google sheet, there's no reason why you can't have, at least 100 of these names with pathways to kind of get in touch with them or get the access you need. So I agree with you on the founder part. And founders, just even from like less on the referral side, but more on the advice side, they can give, they can give actionable advice that even VCs may not be able to give, because they're sitting in your shoes. And
Yeah.
so, especially if they're in your space, they're just, 1 or 2 years ahead of you. They'll be able to tell you all the mistakes they made so that you don't make those mistakes and waste years kind of, spinning your wheels, or tell you kind of, shortcuts for, do you do X or Y for tech, or X or Y for marketing? So that's the other advantage of having these operator conversations.
Also, you can follow my 30% rule. You get on a call with a Zoom neonVest call with another founder who's maybe 2 years ahead of you in his funding path or whatever, and you can do him a huge favor. And now that guy's like, dude, that kid just helped me so much. I can't believe it. I owe him my life. And then he introduces a board member that's like retired general in the US Army or something, and then that's serious, makes you look a lot more serious, as a company. But all right, so before we close on like what it does, what does it cost? So like, what's the price menu? So if a founder listening to this wants to sign up, what does it cost? If a VC wants to sign up to be a supercharger and give it a go, are they making a commitment, or can they stop anytime? How does this work?
Surya,
Aakash,
why don't you go
tell
on
us?
the founder side, and then I'll add on the supercharger.
Yeah. So on the founder side, the pricing actually has, increased because we've seen good amount of demand and relatively inelastic. So it's about, you can pick plans of 1, 3, or 5 a month. So right now it's about $300 to $1,500 a month, based on the number of meetings you take. So you can choose, 1, which is the basic. You can choose 3, which is kind of in the middle. And then you can choose 5 if you want to really go kind of more aggressively on getting these connections.
You can't
It's
go
a
more?
monthly. You can add more on top of the 5 on an a la carte basis. So you would pick the 5 subscription, and if you wanted more, you could just click a button saying top up. I want an additional connection on top of that.
Because I think it's like, if you're trying to get a job in investment banking and you get a job offer from Morgan Stanley, you kind of want a job offer from JPM and Goldman at the same time. You don't want to have them be like, you either come now or don't. So you kind of want to get your options on the table at the same time to choose from. So I kind of think do it hard, maybe take a pause and come back when you're ready again for whatever your reason is. Like, you could do 3 or 5 of just like talking to CTOs or developing a relationship with a VC in between rounds. But if you're fundraising, you should be putting in minimum 50% of your time, is my perspective. And how does it work for the supercharger? What do they get? Or how do they sign up, and what do they get?
Yeah, so I mean, we discussed the incentives for superchargers. In terms of how it works, simple onboarding. There's some basic data that we collect. That leads into kind of the matching and the curation. We have a backend matching algorithm that helps create a universe by which it fully ranks best match to worst match. And so then there's a human variable component on top of that just to ensure quality. And that's kind of how the matching works. But we do collect a lot of data at the beginning on both sides, both founders and superchargers, just to make sure that curation element is there. In terms of supercharger, pretty seamless, honestly. They go through this. I have a call with every single supercharger, and that's just on the onboarding side. I think it's particularly important, especially as we build this out. I mean, you really don't want to pay for this product and then have someone who doesn't actually know what they're talking about or is not an expert. And so it's certainly an important component. Once they're on, then they're on. And so after that call, they get access to the tech dashboard. We go through kind of how exactly they should operate on a call. So for instance, the only obligation for a supercharger is to try to add as much value as possible on a call. No need to look at it from an investment perspective. No need to make connections or make introductions. If you want to, feel free to. We encourage that, but that's not an obligation.
I usually
the
make
only
intros.
obligation is to provide that. And then, I mean, we do other things, and this is more gamifying it, I guess. Like, we tell superchargers, look, the best ones on board, they always get repeat calls. So I mean, try to get a repeat call, or try to really add as much value, but leave it on sort of that cliffhanger, maybe, who knows. And everyone has a different style, and so they've sort of built it up over the years. But yeah, I mean, what's interesting about Supercharger side and how they operate is everyone gets different velocity, everyone chooses different bandwidth, they have a profile, they can change kind of what they want to do. We see an incredible amount of turnover on the VC side. I mean, people are going sort of, I mean, just so often from one VC fund to the next VC fund to, and so what becomes important is to focus on the individual, not the fund. And that's what we do. I mean, everyone, I mean, you could have a rocket science background, but then be in enterprise SaaS investing, right? But that might come in handy when you're looking at, say, a climate tech startup or something like that.
Yeah.
And so we really focus on kind of what people have developed over time. I mean, your own background is in so many different areas that it would be very tough to kind of just say 100% of Andrew is what 7VC is, just because
Sure.
it's not as reflective, and you can
Yeah,
add
like
more
10
value that
startups
way.
before becoming a VC.
Yeah.
So talk a little bit about
I guess sorry, one last point is on this data, it's superchargers have a rating, startups have a rating, and that's kind of some of the proprietary data that we collect. And so mentors or superchargers really love the fact that they have this like almost like this Uber aggregate rating of like, okay, I'm a 4.85, and that actually feeds into how many leads they get. And we want to do interesting stuff with that, but let's see.
Yeah. So, I mean, we could talk about the tech if you want. I mean, it started off as like match.com, but you guys are developing a rather vast amount of data and technology on your own platform. But we're going to run out of time soon. Do you want to talk anything about, I mean, you're already talking about the matching tech.
Yeah, no, I mean, not much to add. I think what will be interesting, and maybe on a future call when we have you on our pod, we can talk about it. But just the data science component right now, it doesn't make sense. There's too little data, but you can really start to do some interesting things, especially given that we're creating entirely new data sets. We're not just scraping off like LinkedIn and other forms of media, PitchBook, Crunchbase, to be like, this is what he represents. There's new data being created, long form content, short form content. We can even use AI tools to transcribe calls specifically and get insights out of those. And so a lot of interesting things we're playing with on the data side, but those have yet to be released. So we can chat about them at a later date.
And I pushed you guys to do events, and we did, the event in New York and Seattle. Maybe talk about crossover online, offline, or what your thoughts are on as founders yourself of how to build this into a scaling bigger business.
I mean, firstly on that, I think everyone on this call and listening to it should know that 7VC, massive supporter of portfolio companies. I mean, never really seen much like it, and been in VC for a while. A lot of support basically on top of it, and really excited to get into the operational things, especially Andrew sort of heading it up. We did a live event with 7VC. We did two actually, one in New York, one in Seattle. I think Andrew, just to answer the question, and this is purely from an operational perspective, ROI just has to be compared to other forms of lead gen. We were doing the live events with a specific purpose of customer acquisition, both on the supercharger side and user. While users are paying, superchargers are also a customer of ours. And so just purely compared to ROI and customer acquisition cost, it fell down in the ranks, just mainly because of some of the other aspects of live versus virtual or online lead gen and stuff like that. And so that's why it may have dropped a little bit, but I don't doubt the value of live. And I think kind of after we do sort of our next large round, which we're slated for Q4, which may push into Q1, but after that, we're really trying to ramp up live again, just simply because community is a big part of neonVest and what we do.
Exactly.
People love the live events that we do. And even the ones that we did, they were fantastic. So many people came to us after. And so I think it's a huge part of it. Would love to do something together in the future.
Yeah, I mean, our events are typically, as you now know, we do like VC panel, a lot of networking, VC panel, couple of startups, and then more networking. So it's a lot of networking, and there's a wait list every time because you can only fit like 120 people in these venues. That it's pretty much 50, like unusually 50% VCs, but there's family offices and RLPs come, and then the rest are founders. I think our events are geared a little bit towards the already funded founder, which may use it. I think you guys were looking for a little bit more of the startup grind guys that desperately need this, snap your fingers and you get network. But I think you guys should be doing like monthly meetup, just go to Costco's and get like a ton of wine and beer and stuff, and just have people on a rooftop in New York once a month, and keep it cheap, and then just keep being like, we're in the community, invite VCs and founders. VCs and founders are the other superchargers to get it going. But where the ROI probably falls apart is your time. Like even for us too, like had I spent that time following up with the family office, I could have raised $10 million. You know what I mean? As opposed to like, I got Fidelity as a sponsor, So, so you got to experiment.
I wouldn't say it's a monetary cost. You're exactly right. It's more the logistics and the time aspect.
Inevitably, some idiots like change my new logo for whatever venture capital ventures, and that's the time sink. But so final questions. What about verticals? I mean, like I was thinking maybe you guys should do a focus on, like, I've got a big healthcare life science venture capital network because I used to have healthcare life science fund equity exchange funds when I was doing the Founders Club. That's why. I thought like sign up like 50 or 70 top, like the whole healthcare life science venture community on his superchargers, and then have a big event, or start going to like big healthcare events. What are your thoughts on that, or getting more verticalized?
Yeah, so I'll give my initial thoughts up, and then Aakash, you can jump in. So I think that's a great idea because, when we look at the founders that are coming to our platform, there are some that are okay with generic, those tend to be like the, enterprise SaaS or just general software companies. But the other companies that are healthcare or, deep tech or, climate tech, energy, they are looking for specialization. And I see it especially in healthcare. You have medical devices, pharma, digital health. And then within that, people are even more specific. Do they look at diabetes? Do they look at, heart?
What
do they look at pediatrics?
Yeah.
And so they are very specific about who they want to talk to. So I think for some of these specialized areas, it makes sense to kind of, market and package those groups. I mean, people can still do that through neonVest right now. Like there are sector filters, and we do get, specific with them. But to actually just have a group dedicated to that, and maybe, you talk about events, but I would say, that's on the offline part, which makes sense. But I would say even on the online part, maybe creating different landing pages. So, if you're even, email marketing a healthcare company, maybe give them the neonVest healthcare landing page and say, check out all the healthcare investors here, sign up. If someone's doing energy, you give them the energy or climate tech page. So I think I agree with that. I think, and as we build up more and more superchargers, we'll be able to have at least 50 or 100 in each category, and then it becomes a game changer.
Look, neonVest is a beautiful thing. I mean, what does it cost a year? Like, I don't know, we're paying like 28 grand or something for pitch book, and a founder can do that, and then they're out in the cold, like standing outside of Studio 54. You're never going to get into that nightclub, whereas neonVest is, you guys have the matching. You can put in like, drug discovery, Alzheimer's, see what comes up, so I think it's interesting. All right, why don't we close, since you guys are now talking to as many VCs as anybody that I know. Aakash, you're onboarding each one with white gloves, like it's superhuman. What are your perspectives of the market? I mean, where's the market right now for pre-seed, seed, Series A, and beyond? What are you guys seeing in the market?
Yeah, no, definitely. And I guess it's interesting because when I speak to them, I'll pretty much always ask like what are your focus areas, but also what are you excited about, right? And honestly, I'm not seeing a big trend as such. What I do see is, I mean, common things will come up. I mean, we did a podcast with Joe Zhao from Millennia Cap, his entire thesis now is based on layered platforms on generative AI, for instance, and they're mainly Series B and growth fund. We've obviously heard a lot of people talk about it. What's more interesting though is the fact that it's not as clear as it sounds in terms of how to play it. I mean, anyone who didn't get into NVIDIA, first of all, has probably missed it on the public side. On the private side, what's interesting is people are layering it up. We did another chat
But can I ask,
with someone from,
I think
yeah,
I would think
yeah,
like Series B and beyond growth, you have these companies that raised in 2021 at monster multiples of whatever their ARR was. And now they've 4x'd with these overfunding rounds that they raised, but they didn't cut costs as much as David Sachs would have you do. And now they're looking to raise on top of this 2x, 4x, 3x, and the valuation's lower. So you've got this bid ask spread of founder thinks, hell no, I'm not taking a down round. And the investor is saying, how stupid do you think I am to give you a unicorn valuation on 30, million
yeah.
of revenue?
I completely. I think honestly,
Did
people
you get
shot
into that
themselves
with
in the
him?
foot by raising too high valuation. I think it's a classic. It's a lesson. I mean, people talk about this time and time again, but really, look, most people will have MFN clauses anyway, and even then, I mean, down round, it's just it's obviously not helpful for a variety of reasons. But we did get into the fact that, look, I mean, you had 2021, you had people raising monster valuations and very, very large rounds, but it was not only very high valuation, but like you said, misallocation of capital. I mean, it was basically the dream was, okay, never ending perpetuity. So when it comes crashing down, then those companies start to lose out basically the most, right? In fact, I mean, we grew largely in a capital efficient structure, and we were just very like sort of hyper focused on making sure costs were staying in line. But I think what is interesting and what many people are seeing, I mean, in general, slowdown in sort of BC, and largely that's because A, these companies have had tough times scaling, and B, the investor market's just not there. But pre-seed, seed, good velocity. But yeah, I mean, to your point, some of these companies, I mean, your investors are looking at them, and either they have just massive amounts of leverage where they're like, okay, let me take 40% of your company, or they're like, okay, let me wait until you actually can bring in new investors, we can put together a round and then maybe come in. So it's a tough time for later stage. Earlier stage, good velocity. I think one other interesting thing though that we're seeing is how global is sort of interacting with this entire puzzle piece, and it leads into kind of how we think about. I mean, you mentioned vertical expansion. We're also thinking about sort of just global and tapping into these emerging startup hubs. I know you've mentioned sort of do events in India. I mean, some of these hubs, like we have partners already there, for instance, in Mexico and Argentina, where they're like, look, we'll bring neonVest to, like, you don't need to do anything, and we do some type of rev share or something like that, but bring it here because we need it here. And there is a huge amount of value to try to connect to someone from the US, but from a different part of the world. And so those geographic borders are kind of quickly diminishing, especially through our product. And we're also seeing way more US investors interested in global. And that's part of what is happening on the platform itself. You're seeing investors in sort of Hong Kong and India looking at the US, but more than that, you're seeing these US investors be like, look, we're raising a new fund that's going to be a global fund or Southeast Asia. And that's where we're focusing on.
I remember I moved to London from Silicon Valley, and I was like, this is just like Silicon Valley, same exact nonsense. And 10 networking events a night. You can only be on one panel at that hour, and there's like 20 going on in London. And then I got to like Singapore. I was like, same thing, just like Silicon Valley. Jakarta, Malaysia, KL, Kuala Lumpur, China. It's basically everywhere. So, I mean, go down to Latin America, same thing. So I think you guys should take some kind of like Founder Institute, franchise, global. I think you should seriously crush it in India, with your backgrounds in networks. I think that I mean, my books are, started off in English. We have, a lot of the feedback on my books is from India. So I think that would really expand your ability to super network these people fast. Before we end, shout out on your podcast. Just tell us a little bit about the podcast. Who are you seeking to have on? So and people can get in touch with you if they want to even be on the podcast.
Yeah, appreciate that. It's called the neonVest audio experience. Everyone go check it out on Spotify. We've got a bunch of episodes out already. Like I mentioned, most recent ones, Joe Zhao, Millennia Cap, Ajay Daria, partner in MedTech VC, got a bunch of founders and VCs on board. Who we want on board, primarily people who are just domain experts in their field. VCs is who we're looking for, VCs, CVCs, founders. But anyone, I mean, honestly, the more different your background, the more we can have an open conversation. I mean, it's called the audio experience, but think of it like Joe Rogan experience. It's much more of an open format. We don't give you the questions beforehand, and I will test you on some rapid fire. So beware.
Okay, well, if you send me the questions, I probably didn't read them until after the podcast because I'm behind on my email anyway. What was I going to say? Yeah, we can't talk about future funding plans for regulatory reasons, but most startups tend to raise around once every year or so, and you guys are, probably going to do that. I would say I'll put your emails in the show notes so people can get directly in touch with you if they're interested at any level, potentially learning about when you're going to open up a funding round or being a supercharger or signing up. So guys, this has been great.
That'd be great.
You guys are crushing it. Yeah. It's exciting to be in an early deal, and I think you guys are kind of unique and special, and it's a move it forward that just generates so much, monetary value that you should be recognized and be able to generate some revenue for that. And it's very borderless, which is pretty exciting. Anything else you guys want to say before we close?
We'll love having you on the cap table. It's been an amazing journey so far, and can't wait to scale this up, have this in every founder's hands globally.
Yeah, okay. Andrew, thanks for the support. Not just as a check writer, but in all the kind of advice and tactical initiatives and introductions, and hope to continue this partnership at the same momentum.
Okay, guys. Surya, Aakash, have an awesome day. Talk to you soon.
Thank you.
Bye for now, guys.
Thanks.
Later.